Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India.
A warm welcome to our special National Fintech Day episode of India Fintech Diaries. I am your host, Hemant. Today, we are focusing on the backbone of our economy, the MSMEs. MSMEs contribute 30% to India's GDP and contribute 60% to the employment. Yet, they have long struggled to access the high quality financial services available to their larger peers. To dive deeper into this crucial topic, we have two very special guests with us today. Kumar Shekhar, Deputy Country Manager, Tide India, and Sundeep Mohindru, Promoter and Director of M1 Exchange. Welcome to the show, Shekhar and Sandeep.
Thanks, Hemant.
Thank you, Kumar.
So, Shekhar and Sandeep, we will start with brief introductions. So, Shekhar, and sorry, I think I should call you Kumar, and you just told me a great story and background about it. So, Kumar, let's begin with your introduction, and also weave in this confusion between Shekhar and Kumar.
No, that's perfectly okay, Hemant. But first of all, thanks for having me here. I'm really very thrilled and excited to be part of this podcast. Quick background about me: have approx 2 decades of experience working throughout my career in financial sector. Currently working as deputy country manager and SVP member operations. The primary job is to scale or set up processes which can be scalable, right? Is across services, KYX, ongoing monitoring, creating support like training, quality assurance. So that's primary job. Before this, let me take you in like 2006 when I started my career. I joined GE Capital as a functional trainee fresh out of the campus. Initial 6 years primarily I spent in credit cards, collections, process audits, and then by sheer, I will say, a decision taken by GE Capital to sell off its stake in India, it became SBI Card. And in the last role, I was heading entire fraud detection for SBI Card. And then in 2017, I decided to move and explore career outside GE Capital and SBI Card. And that's when I joined PayU. My initial phase was all about managing merchant risk. But while I left PayU, I was managing a broader portfolio of merchant onboarding, chargeback, fraud analytics, and then Tide. So for the last 3.5 years, I have been associated with Tide, setting up business in India. If I talk about Tide briefly, right, so that we all are on the same page and understand more about Tide, it's a UK's leading business finance platform, and currently we have more than 10% of market share in UK. So every 10th SME is actually banking with us. In terms of portfolio, generally we offer product under four different verticals: payments, financial services, business services, and credit. And under that, obviously, I will talk through when we talk in detail. There are various features we offer to the SMEs, making it one-stop solution for them, and hence it is one of the loved app across UK. And then now we ventured almost like 18 months back in India. We started with a product expense card, which is a rupee card with collaboration with Transcorp. And today, if I talk about the numbers, in 1.5 years, we have crossed almost like 3 lakhs customers in India, with almost like a Google Play app rating more than 4.5, which means it's one of the loved app. And we have basic features available like invoicing, accounting services. Then recently we added bill pay as a feature. So briefly, if I have to talk about my introduction on Tide, this is it, Hemant. Happy to take any further question.
Thanks, Shekhar. Sandeep, let's go with you now.
Yeah, thank you, Hemant, for hosting us, and glad to be part of this session on the FinTech Day. So, in fact, I have been an entrepreneur most part of my life since 2002, and an MSME entrepreneur.
Hmm.
So my first venture, which is running successfully, is into finance and HR, shared services, technology space. And
Okay.
the second venture that I've started in 2017 is M1 Exchange, which is a trade platform licensed by RBI, and wherein we enable invoice discounting, or you can say receivable discounting for SMEs when they raise invoices on their customers. So as Kumar was explaining, when they raise invoice on their app, they can get invoices discounted on our app
Hmm.
in continuation. And today in India, it has become a kind of a norm that the SMEs can has an ability to get their invoices discounted using 60 banks which are on our platform. And these banks come forward and discount the invoices on a bidding basis. They bid and offer the best rate, and
Got
this
it.
is the best rate the SME is able to get his payment the next day. And he's de-risked because there is no recourse on him. The
Right.
recourse is only his customer, and therefore his business gets de-risked. That is one of the most important elements for an SME that we have created. And needless to mention, the competitive rate at which it gets discounted. It gets discounted anything between 7% per annum to about 10, 11% per annum, which is not a rate which an MSME could get outside this model. So we'll explain about it, we'll discuss about it as we progress along.
That's fantastic. So, listening to both you guys, what we're going to do today is we're going to split our conversations because those are the two areas that you operate in. We are going to split our conversation on MSMEs into MSME banking and MSME lending needs. And what we're going to do is throughout the episode, we will explore these segments from various angles. We'll start with what the customer challenges are, why do we need this, what is the size of the market opportunity in these spaces, what is the role fintechs are playing to solve this, because there are banks to solve these problems, then why fintechs are required and what is exactly the role they are playing, and what do you think the future is going to be in these areas, and what is government already doing, and what do you expect as practitioners, as a player in this area, that the government should do more. And what we'll do is let's start the discussion, Kumar, with you first, focusing on the MSME banking. Now, from what I understand, with the small amount of time that I have spent in the financial services in the fintech area, that you already have these MSME banking units under public and private banks. All of them have it, right? Then why, after so many years of these banks being in place, there are still challenges in MSME banking which are not getting solved? Can you just help us walk through through the different challenges these MSMEs face, which are not getting addressed, or not all of them are getting addressed by a private or a public bank? Let's start with that, Kumar.
Yeah, yeah, for sure, Hemant. And must say, a very right observation. Matter of the fact is, yeah, most of the large bank have a unit called SME banking, right? And that's matter of the
Right.
fact. No one can actually dispute or deny it.
Correct.
But the other fact is also that, do they have a laser focus on SME segment to solve their pain points? Maybe the answer is no. And there the need has arisen. For example, I will quote a few things only, right? I will not go in detail, but to name them. Still, their assessment for the credit is has not evolved. Is historically relying on the same credit score or the financial statement. And the bigger challenge with MSME is they do not have a formal bank statement or a formal bookkeeping practice, right? So they fail miserably to provide all the requirement which the larger bank ask for, and that's a challenge, right? So you have to look for example, if I quickly jump, what could have been and why fintech has actually come in the picture. They could have used alternate data points, right? And it can be anything. It can be social media activity. It can be as simple as my mobile bill payment, right? That history can be used, right? But I think a long way there, primarily. Then the second is, though there are a lot of programs which these bank run, what is the awareness of these programs within the SME sector, right? So bank will have to take it actually to the last layer, where actually the SME segment, understand their product offerings and the process. Third, the processes are not very simple, and I will slightly digress, Hemant, if you permit. I will
Mhm.
quote a non SME example out here, which happened with me. Right? So
Mhm.
my father-in-law was more than 80 years, or he's no more. But since he was struggling with the banking, he used to take my support, right? And
Right.
one day he asked me to that Kumar, can you take me to the bank? I need to do certain transaction. I took him to the I had to take a day off. Took him to the bank. The worst, the bank said your account is dormant because you have not transacted for 3 months. No awareness that it could have been simple SMS or a call that look, Mr. X and Y, your account is going to turn dormant and other stuff. So these kind of awareness. Now the process of activating that account was too manual in nature. Now this is happening with a customer, and this is not a very dated example which I'm quoting. It's hardly a year and a half back when I faced this, right? And then I had got more firm belief that yes, there is lot to do in terms of making the processes simple, which can be quickly adopted by the masses. And there these large bank struggles, and especially now coming back to SME sector, MSME sector, I think for them it might be even a less than a percent portfolio kind of. Hence, it doesn't get the focus it actually calls for. So that's my summary, Hemant, that why they are
Understood.
struggling and why the need that the fintech can come into the picture and really make big out of it.
Understood. Understood. Now, if I come to you, Sandeep, when we talk about banking, it is still understood by people. So even before going to the challenges, because it is well known in the market that the MSME financing gap, and by some count, I think about $400 billion in India, is massive. That is very, very clear. But it is not an area that is understood by everyone. So I want, of course, you also to talk about what are the challenges because of which the private and public sector banks are not able to address this gap. But before we go down that path, Sandeep, it would be great if you can help us break down the different type of products under MSME lending, right? Because there would be secured product, there will be unsecured. Within unsecured, I think there would be short-term unsecured business loan, and there would be supply chain financing. And in this entire ontology, there is one area primarily that you are playing in. So if you could just start with this structuring of different type of MSME lending, then come to your own segment and tell us what are the challenges which a private or public bank is not able to serve, which creates a need for a fintech player to come in and try to solve that problem.
Yeah, sure. Hemant. So you're just to so that we you're right. I mean, let's just discuss what are the various SME lending products that are available. So one is, of course, the standard term loan of various nature, whether
Hmm.
it's a machinery loan, whether it's a business loan, and that is to be paid in EMIs equally over a period of time. And the SME has to follow the protocol of repayment every month. So one is a standard product,
Right.
followed by working capital OD product, which is for his business working capital receivables and payables, inventory, and wherein which we are all aware of that there's a cash credit, there's overdraft. He can deposit the money, he can withdraw the money, and within the limits these products operate. Now, both these products that we've discussed about are fully collateral based, mostly in India. Mostly, I mean,
Hmm.
most of the SMEs in India are giving collateral for getting these products. Yes, there are some exceptions, the small ticket amounts which are given as a starting point, but mostly larger value ahead of 50 lakhs, 1 crore, they are supported by the collateral that the SME can bring.
So Sandeep, the when you say small ticket, then that means under 50 lakh is small ticket. Anything above 50 lakh would become a slightly
Yes, you can
medium
say that.
ticket and large. Okay.
Right, right. Then is the new age products which have come up is the which are of various nature, whether it's invoice discounting, whether it is receivable discounting, factoring, purchase invoice discounting. There are various names to this, and the essential element around this is that these are transaction based products. They are
Hmm.
short tenor. They could be backed by collateral, they could be without collateral also, and they operate in a most of them operate in a high cost scenario,
Right.
which could range between 12% to 20% and upward in the SME segment.
Hmm.
In the first bucket that I just talked about, that is term loan and the OD and the WC facility, there are also cases which are also without collateral. Again, they will be the MSME will be borrowing in the range of 15% to 24% kind of a scenario.
Got it.
So there is, so if I broadly divide it, you're right, collateral, non-collateral. Collateral would be 9% to 11-12%. Non-collateral will be 12 to 24%. It could be term loan, it could be working capital, it could be more like supply chain finance structures that exist today. And then the other side of the business is the export import trade finance, so which is
Got it.
LC, bank guarantee, and those kind of export finance products.
Hmm.
Again, divided to the same category, working capital and supply chain kind of products. So this is the broad categorization of the products. Feel free to correct me if I missed any.
No, no, perfect.
I'll
That's very clear.
Yeah. Now let's go on to the financing that today is happening. Even Kumar was mentioning that most of the financing is based from the banks, and the is basis the collateral and basis the financials of the SME, which are past year financials, and where there is normally a time lag for submission to the authorities, and so you're obviously referring to a financials of a period ended about 6 to 9 months gap from your
Hmm.
requirement date. And the working capital that will be offered to you to the SME will be basis his last year financial needs and his collateral value that is on the table. Now, what do the MSMEs do for growth financing? Essentially, they would borrow outside the banking system through NBFCs or through other means, and which will be mostly without collateral and which will be very quick to disburse because he needs them like very quickly because his orders are in hand or he has other needs for expansion.
Hmm.
And that's when the cost of borrowing becomes another important element, which I would suggest to cover as well.
Hmm.
Because if he's borrowing at 15, 18, 24% kind of numbers, then he is kind of making his business more riskier and less profitable, which is the scenario today. The other challenge sitting on the MSME desk is that when he is selling to his customer and his collection cycle is 60, 90 days, 30 days, between broad these three categories, but the payment that is coming from his customer is beyond those days, and all the planning that he has put in place for his working capital and effective utilization for the next order goes out of toss, and then he again has to borrow on a quick outside the banking system at a high cost scenario. So these are the challenges which he is facing.
Hmm.
What we are doing when we set up in 2017 was essentially to solve this challenge, that at least the receivables is taken care of by the MSMEs. They don't have to worry about their collections, and the cost, and it is not backed by any collateral because he's already delivered the goods and services. Now the risk is on his customer, that the customer has to make the payment. Now whether he makes the payment on time or later, but can the MSME get his payment immediately? That means he supplied the goods, the quality has been tested, can he get the payment next day, T plus 1 day that we say it. And that's when the threads come into picture, and that's when M1 exchange, and under the guidance of RBI, we had set up this model that SME submits his invoice, his customer is also on the platform, and his customer approves the invoice. Now that is a very important element because the trust the banks don't have on the MSME or any other enterprise is that this invoice is genuine, duplicate, financed earlier, paid earlier, etc., etc. That
Right.
trust is established because the customer is coming on the platform and validating that this invoice is genuine and this invoice due date is X date.
Hmm.
Now, the Treads thereafter get 60 banks, all the banks in the country that you can think of, nationalized bank, foreign banks, private banks, all of them are on the platform. They take a risk call on the customer. Like I said earlier, they're not taking a risk call on the SME. So therefore, It doesn't involve that kind of huge trail of analysis on the SME financials. You just need to analyze the customer of the SME, and basis the customer risk, the limits are sanctioned on the platform itself, and the invoice and the bank start to bid, and the invoice gets discounted at the best price. So imagine if a SME is supplying to an auto ancillary of of let's say Maruti. So
Hmm.
Maruti may be very big, but then they have various auto ancillaries serving them, and these auto ancillaries have SMEs serving them. So now this auto ancillary has at least 40-50% of their procurement happening through MSMEs. So now the bank is taking a risk call on auto ancillary and financing these 50 SMEs. Let's say each one of them is 1 crore value invoice, so 50 crores in a month. So by analysis of one auto ancillary, you are serving 50 MSMEs, and each one of them is getting their receivable discounted, let's say on an average value of 1 crore a month. So that's the kind of power it gives. And one of the important point is it's a network which is created. So there is
Right.
no bilateral relationship. That means let's say State Bank of India versus an SME, one giving to auto ancillary X is not having any bilateral relationship. They are all signing an agreement with M1, wherein buyer, seller, and the bank. Now, the bank could be State Bank, could be PNB, could be Standard Chartered, could be HSBC. It doesn't matter. The KYC is applicable to all 60 banks. The agreement is applicable to all 60 banks. And if the SME is supplying to the auto ancillary Y or auto ancillary Z, that does not matter. There is no need of an agreement between auto ancillary and XYZ on the platform. So
Got it.
therefore, it gives financial freedom, that you choose which bank, you choose which customer, and it becomes a big network. So that's the kind of value it is bringing in. And simultaneously, now for a bank perspective, if you look at it from the bank size, today we have reached a stage wherein each bank has just created one man, two-man desk in their office. They don't need branch banking. They don't need to run out to MSME and do his KYC and his agreement. Like I said earlier, they just come
Mhm.
on the screen like a stock exchange. They just see the invoices. The risk has already been evaluated on their customers. They just how quickly can you buy the invoice? So it's a speed at which they can transact, and they can build their book. So it is a priority sector lending book for them.
Yeah.
So these people have their own business targets, and they run very fast.
And Sandeep, just a connected question. Then, in your estimate, how large is this receivable financing market in India?
Okay, very good point. There are various ways to manage this data point.
Hmm.
One of the ways that we've looked at it is that there are 14,000 small, I wouldn't say small, sorry, there are 14,000 large and medium enterprises in India that are rated decently. That is, they're above investment grade rating, which is triple B and above.
Right.
These 14,000 enterprises have MSME procurement to the tune of 100 lakh crore.
Hmm.
So this is the bare minimum that we can service in rupees. This is 100 lakh crore. This is the bare minimum that one can service them. That is one side of the business.
Hmm.
The second side of the business is these MSMEs are in turn procuring from tier 2 MSMEs.
Right.
Now, that is equally 100 lakh crore, another big market.
Hmm. 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 Hmm.
Because what I in the first bucket that I said 100 lakh crore or 14,000 companies, this is all domestic purchases.
Right.
So we have calculated their COGS, that is cost of goods sold. Out of this cost of goods sold, 40% is MSME on an average, which leads to 100 lakh crore. Now these MSMEs and the MSMEs who are doing exports in India and imports in India, buying from tier 2 is another 100 lakh crore. So it's a huge market. It's a huge
Got it.
need in the market. How much this can be oiled and the infrastructure can support it,
Mhm.
that is growing over a period of time.
Got it. Got it. And for our audience, what just Sandeep highlighted, number one, when he kept saying customer, it is the anchor client, which one example Sandeep took was a Maruti, or it could be a Tata Motors, or any large company which would have multiple MSMEs. The second, the two estimates that Sandeep pointed out, both are demand side estimates. supply side would be the amount which is outstanding, just for the convenience of our listeners. Now, at a similar context, if Kumar, I have to ask you a slightly complicated calculation, but if we have to put a number to the MSME banking size or opportunity, and I know it would vary based on how much are the deposits, how much is the fee income, but whatever internally you're using, of how do you size the MSME banking opportunity uh, minus the lending part? What would be the number be around, or the approach, just like Sandeep had for MSME lending?
No, no, perfect, Hemant. Yeah, it's a difficult one to give it a number, but I will give you one way of calculation. The
Hmm.
registered count of MSME in India is generally always quoted as 63 million, right? You must have heard
Right.
this.
Yeah,
Then
yeah.
hearing that they generate like employment of 400 to 200 million people, and then maybe also a couple of more numbers that they contribute to 30% of GDP. We can pick anyone, but how I
Right.
will go about is generally, if you look around the world population and the SME percentage to the world population, it will be around 8 to 10% easily. Easily. And
Hmm.
I can give a country specific number for that matter. For example, let's take UK. The population will be approx 7 crore, right?
Right.
And their MSME count is approx 60 lakhs, which is almost like 8, 8 9%, right? But in
Hmm.
India, if you look at the sheer potential, you will see at the number at 63 million to maybe 140 crores population, which will come around 4.5%.
Right.
So, so I see this as one metric, but if you extrapolate this entire number, what I've given for the world and specifically UK, the potential of this market size for India from a banking perspective will be not 63, but just double that. So 130 million. So that's the sheer uncaptured, untold market potential when we talk about MSME segment. So the market size itself is huge. Can't quantify it, right? That what will be like in terms of billion or a trillion.
Understood. Understood. Though, Kumar, there is a connected question to that. Now, I understand from a demand perspective, there are X number of MSMEs out there in India who would require banking services. But unlike UK, where you have a very specific neobanking license, in India, it has not been a easy journey for either a retail neobank or a MSME neobank, in terms that there is no dedicated license as such. That means one of the main revenue generator for any bank, which is the spread, that specifically is not accessible for a retail or a MSME neobank. Plus, the regulations have been going up and down, and we have seen examples primarily in retail. I think MSME it has not happened, where because of regulation, the supporting bank or underlying bank had to cut ties with the fintech midway, which created like crazy problems for the fintech. Plus, there is margin pressures because there are only limited banks in India who have the technological capability to tag and to connect with someone like a Tide who is technically far ahead in some terms. It again creates a problem because there is negotiation power with their two or three or four banks which can actually do this. Now, how are you tackling these challenges in India, which are slightly different from what you would have seen or the organization would have seen in UK?
No, no, very good observation, Hemant. Yes, UK world is evolved slightly better clarity in terms of the regulation on the neo banking. But let's pick India.
Hmm.
Really, I've been a big admirer of Indian regulators. Right? It's
Right.
not that they're not bringing clarity. It's just that they wait, they observe, and then they act. This is how they have
Hmm.
been doing. If you look at a PAPG license, in fact, I was part of the PAPG. So those all PAPG were operational for almost like 10 years before actually regulator got into when it was a size to be managed, and they gave
Hmm.
a good direction to it. So today it is a well-regulated entity, kind of sector. Similarly, I see the neo-banking space. Yes, in B2C segment, I will not quote the names, but yes, you
Right.
highlight there were a couple of debacles in the past. But what ideally a fintech should do, I can talk more about that, right?
Yeah. Sure.
Ideally, you should work very closely with the regulators, right? They are not your
Hmm.
enemy; they are your
Hmm.
support.
Right.
Learn from them, understand what they want. Primarily, whenever you interact with the regulator, you will learn that they just want a compliance first approach.
Hmm.
And mostly the action has been taken on being non compliant, right? It's not like
Right.
that you have created a wrong product. It's primarily that you have been non-compliant on onboarding, on a KYC, maybe weaker ongoing monitoring support. So if you're working very closely with the regulator, understands what they want, and keep the things as per them, I think the journey is solved. First, second, don't depend yourself on one product. If
Mm.
you make one product based company, yes, in the uh, I will say worse, it can fail. Suppose that there is a regulation which debars now that product, which happened in the past,
Right.
then obviously you are in trouble. So better diversify. For example, let's talk about tide
Mm.
so that I will be able to explain it easily for the
Mhm.
audience.
Got
We are
it.
not depending on one product, right? There are a lot of in-house product like invoicing, and
Mm.
people have not actually learned the power yet of these products. These are looks to be very simple but very powerful, as Sandeep was saying. Now, finance is available based on the invoice discounting.
Mm.
Similarly, accounting. People struggle to file their taxes because their personal expenses and business expenses are mixed all the time. They actually keep on making their expenditure through the same app.
Mm.
So if you start segregating, you will have a easy, I will say, bookkeeping, and it will help you file tax, keep things for the businesses at one place very cleanly, right? That's another. So work on the products. So don't make a company one product based company and a revenue. So diversify your revenue across. Then you also spoke about the cost. Yes,
Right.
the operational cost, especially the compliance costs, are high. Work
Mm.
on, I will not just say you go ahead and use machine learning and AI to optimize your
Right.
cost.
Mm.
I will not, these are jargons which everyone uses, but
Right.
still I will say keep your cost under control. Build
Mm.
processes which are scalable and which are not people dependent, right? And the easier example can be you will look around your most of the app. In first go, you will not be able to connect to the agent or a person on the other side. You will actually go through a chatbot, right?
Right.
That's the easiest example or simple example I can quote for that. So keep the operational cost in check. So if I have to summarize, work closely with the regulators,
Mm.
work and collaborate with the banking, NBFC, and other fintechs to ensure that there are multiple products you can offer. Diversify certainly your revenue streams, and then ensure that your operational costs are under check
Mm.
when the regulations are pretty not very straightforward and clear.
That's very very helpful, Kumar. Now, Sandeep, I think you have like this great vantage point where you have been a MSME, and then you have gotten into an additional space which is solving a particular problem of MSME. And if you look at the most recent budget, the Honorable Finance Minister had a strong focus on MSME. So, if you have to list down the most impactful government initiatives from the MSME perspective, and especially MSME's access to financial services, what would you say have been the most impactful initiatives? Question number one. And question number two is, what more do you think the government can do to further support this particular group?
Yeah. So from my perspective, I would say that one of the most impactful one is the change in the credit evaluation of an MSME. The
Hmm.
new the new engine which is being talked about, wherein the bank should develop an expertise to evaluate the MSME basis their cash flow based lending or transaction based lending, and not just the past financials based lending. So this change
Hmm.
has in the budget. Every bank is now working towards creating this engine, whether through partnership or in house. And now the capacity building in terms of the bankers, in the terms of the bank's credit team looking at it, will automatically start happening. So far, it has always been talked about is technology, technology, technology.
Right.
Now the bank's internal team has to be ready to adopt and look at the risk from these eyes. Now, because it has become a new norm, and now the finance minister, honorable finance minister, has announced it, and the banks are adopting it over a period of time, this will become a product which is adopted by the bankers internally from their heart.
Hmm.
So because all of them have grown with a collateral based lending, they have to get ready to look at a as MSME from a transaction based lending.
Right.
So this is going to have a large impact change over a long term of time, over a long period of time, and if all goes well in few years, this should become a new norm in the market. So this is one big change. One of the change which has been done for trades has been also been announced in the budget is that trades has always been allowed for anchors, like you mentioned, which are MSME customers of any range, any size. It was
Hmm.
mandatory for the corporates with a turnover up to 500 crore to register on trade, so they could enable it for their MSME suppliers.
Right.
Now, government has made it mandatory for corporates up to 250 crores. So,
Hmm.
like I said earlier, any size can come, even 100 crore size can come on the threads and get himself registered as an anchor buyer, and his
Hmm.
MSMEs can start with voice discounting. Now, but the mandatory part makes it get them to taste it as a part of a compliance, and if it is making commercial sense and making them more robust as a supply chain, then most of them
Right.
start using it in large value and variety. So that's another change which has happened, announced in the budget again. Now, if you ask me what more government can do, one of the points which even Kumar has touched in his point, and it's
Hmm.
a fundamental point, is the fact that the speed with which the banks bring a change and adopt and thereby take action.
Hmm.
Many times the fintech is running ahead of time,
Right.
and then you struggle to get liquidity on the platform, which we experienced as a platform in 2017, 18, 19, 3 years. The words like fintech and the words like digital invoice discounting, all these words were not there in those days. So
Right.
it was a challenge to come to convince banks that this can happen, this is sustainable, and the banks have to bid. Now, like this, today also, we have started deep tier. That means SME 1 versus SME 2. Instead
Hmm.
of, so in the original trades, what's happening is SME 1 giving to the anchor large buyer.
Right.
Now we are saying SME 2 giving to SME 1.
Right.
And here we are doing a credit risk on SME 1.
Hmm.
And this SME 1 is basis his bank statement, GST, and his dealing with his customers on M1. So
Right.
basis that the banks have warmed up to start doing these transactions. This is a recent phenomena. Now, how quickly they scale is a matter of time. So if that can be managed better by the government, that how to bring this a large change in the banking sector, the faster the India will move.
Makes sense. Makes sense. I think personally experienced this long time back. I was pitching at that time. Trades was not there. I was pitching supply chain financing as a consultant, as a product for a bank, and we were still discussing L1 financing, which is basically anchor client connected to the MSME, right? The first level of SME, which is L1, and even that was so complicated from risk perspective to digest. And you're saying now your partners, a lot of banks are happy and experimenting with anchor client to L1 MSME, L1 MSME to L2 MSME. So the leg 2 is also that they are ready to explore and are trying to build towards it is fantastic. That is a big change. And a large portion of our MSMEs lie in the second leg, right? Not everyone is serving a anchor client. Yeah, that seems a big change. That was very helpful. And the next question is, Kumar, to you. Now, it is not hidden that the economy is going through a bit of a challenging time, right? Now, because you are directly dealing with MSMEs as MSME banking service provider to them, how are you seeing the impact of this on your customers? One question, number one. Question number two is it impacting your growth plans as well, of how you want to grow? Of course you would find a way out of it, but what is there an impact itself, or we are just reading in news that it's changing time, but it is not that deep an impact, and we are expecting it to flow through it?
No, a good line that everyone will find their own ways. You said that, so I will stick to that. So
Mm.
Hemant, economy on its own takes turn every 10 years, right? And that's
Right.
part of the journey, right? It's not a always upward straight curve.
Hmm.
It's like a heartbeat up and down. So it will continue. But if I have to talk about MSME segment, I will still say it is a non-penetrated market, Hemant.
Right.
So while we say the economy is slightly challenged and people will face the heat of it,
Hmm.
it is when you have got everything in your hand and then you start cutting cost. I'm talking about a population which is underserved already
Right.
and they want to grow quickly. So for them, this impact is not that high. Rather, they are seeing this as an opportunity that how they can actually digitize their business, right? And the COVID was one of the classic example when the economy got biggest hit and the digitization got pushed. Similar environment. Suppose if you go back or go to the tier three, tier four cities, do they currently want to keep their business only to the local market? The answer is no. So
Hmm.
the biggest opportunity for all the fintech, even banking, is how they can still continue to enhance the digital capacity to penetrate well across. So there is a as I was mentioning, very high demand. You just need to ensure that you are playing with the best of the product which suits their need and that can solve their pain point. Until unless like you are pushing a product which is of no use, then you will struggle. But for example, again, invoicing is a basic need, right?
Hmm.
If you want to sell digitally, else you will struggle, right? You can only be limited with a receipt book and a local market.
Got it.
Similarly, segregation of all the payment details. So, right product with the right market, I think still people are eager to move up the ladder in terms of their business ambition. So, yes, slight challenging time, but there are ways for even the MSME they want to grow and for the fintechs to capitalize on this opportunity.
Understood. And Sandeep, a quick, short answer to this one. So, have you seen a dip in the percentage growth in terms of invoicing amount for discounting that is coming on the platform, or there's no impact on the growth percentages year on year?
No, there is no impact. Rather, it's in a growth mode. We are
Perfect.
growing 100% year on year. And primarily, I'll just add one point here to
Hmm.
what Kumar was saying. See, in the bad times, the cost of financing and the speed at which the finance is available,
Becoming
de-risking
important. Yeah.
yourself,
Hmm.
all these factors go very well with M1,
Right.
with the whole product. So, I mean, it's a no-brainer. If I
Hmm.
can make the payment on T plus one, my negotiation with my supplier, I as an anchor customer, my negotiation with my supplier will be very different. Because of my goodwill, he is able to get the payment on T plus one and at a rate of interest which is at least 6 to 8% lower than his cost of borrowing.
Right.
Obviously, it is he would go any way to help him, and the SME will be a winner in any case, laughing his way to the bank, and SME is de-risking himself. So, in the bad time, this is rather more productive.
Makes sense. Makes sense. I think this has been a fantastic discussion, Kumar and Sandeep, and thanks for joining us today for this one. And Sandeep and Kumar, if there are any listeners who want to reach out to you or your organization for something, what would be the best way to reach out? Sandeep, let's start with you.
So I'll give my email ID. I mean, they can write to me anytime. And that's one way of doing it. If that's fine.
Understood. And Kumar?
Similar, Hemant, they can actually visit tide.co
Hmm.
and obviously they can reach out to all of us at Tide. But if they want specifically to reach out to me, I can share my email ID and they can reach out. That's perfect.
Perfect. So that's it from India Fintech Diaries this week. Do log on to our website, indiafintechdiaries.com, for show notes and exclusive content. And we will include these contact details that Sandeep and Kumar promised in our notes. Till next time, stay safe. Thank you.